Welcome to The Lumber Word, where industry veterans Matt Beamer, Greg Riley, and Ashley Buckholt dissect the world of commodity lumber each week. We bring you up-to-date insights on supply, demand, and market trends, sharing our trading expertise to benefit everyone in the supply chain. Join us for informative and entertaining discussions that guarantee to make you wiser about all things lumber.
Hey everybody, welcome to this week's episode of The Lumber Word, episode number 78. We're recording on the 5th of June. Welcome everybody, and we have a guest, a reoccurring guest, hasn't been on here in a while, Matt Lehman from Lehman's Lumber Guide. Welcome back, Matt.
Thank you for letting me in the inner sanctum. I felt like I was expelled there for a while, but
not at all.
No, we had it in the penalty box for a little bit, but you know.
I watch enviously though.
Well, so tell us a little bit before we jump in, what's going on with Lehman's Lumber Guide. I was just moving around on your website a few minutes ago, and you've updated that. It looks pretty darn good.
Yeah, I got rid of a lot of stuff. I stopped doing the scouting report.
Okay.
And I stopped reporting prices. I just finally caved in and said, there's no way anybody's going to overtake Random Links for lumber prices one of these days. So I'll let you guys have that. But I've really started.
Matt, but just one real second. That's what we figured too. We just stopped quoting prices, and see how that worked.
Yeah, it's like if it fits for you, fine. I always told everybody, so why do you want me to write the whole process of how I got started in the business? I was talking to a mill one day, and he was just livid about Random Links missing to print for Southern Yellow Pine lumber. And I said, so what do you want? And he said, I want somebody to call me up and ask me what my prices are and how my business is. And then he paused, and I said, and then write it down and mail it back to you and charge you for it? And he said, yep, that's pretty much it. So that's how I got started. One guy said, ask me and then charge me for it.
That's cool. So before we start, how do people get a hold of you and sign up for your report?
Laymansguide.com is the easiest thing to do. And I'm still doing the 2-month free trial. That's my go-to. Don't have to ask for an order. Either you like it or you don't marketing strategy. It's interesting how one of the things I can see about my business is the way things are consolidating. I've noticed some shrinkage in my membership rates because of, really probably just USLBM buying up every other mom and pop yard they can find. But the consolidation has made me rethink what I'm going to do. And quite honestly, I'm a little concerned about AI over the next little bit being able to replace something in the business. And I think I might be one of those people. So I'm working on primarily education right now.
Yeah, AI has already replaced me, Matt. This is AI generated, Greg Riley.
Ashley,
and see, let me know if you like me better than the real one.
Well, did the other one eat in front of you? So maybe that's. I didn't know robots had to eat.
Well, let's jump into talking about the week. I know. So, Beamer, I've had a tough week. I really had to get down in the office today because Greg is in my office every day, ask me if I've called guys back and asked for the order. It's one of those weeks.
Yeah. And you feel like a rookie?
I actually did feel like a rookie today. Finally, I looked over. I'm like, hey, man, I haven't left my desk since this morning. Can I get something to eat?
I love that. I'm eating lunch right now, right? I mean, this is back to the old days. I mean, you got to really grind out there. Every inquiry, you got to follow up everyone. And, it's, guys are squirrely out there too, right?
The only thing that's missing is the guy next to you with a cigarette.
Yeah.
Or two cigarettes.
No.
Yeah.
To be back in the day, you start on the trading floor in the morning, and at the end of the day, like the 6 feet, like 3 feet down on the ceiling would be just like a cloud of smoke.
So
I remember the guy that was sat next to me. He'd light a cigarette up every time he picked up the phone to make a call, and I'm going, "Hey, you have 3 going there." But
that was after the 2 martini lunch.
He'd come, and then they'd go downstairs for lunch for about 2.5 hours, and he'd come upstairs. And back then we had a bell. Like when you sold something, you rang the bell. It was like you were a gerbil. Bing, ring the bell. And he'd come back, he'd start banging the bell and go, hey, hey, what'd you sell? What'd you sell? And he'd say, and I go, yeah, but you didn't have the freight. Oh, he'd call the guy back and
need another $80.
And the guy knew that he hadn't added the freight, and he'd say, okay, fine.
And the guy would give it to him.
Yeah.
That's great. Well,
for some of our younger viewers, that's a little bit of a flashback to back in the day.
Yeah.
Yeah.
So
people go smoking.
I kind of joked about that a little bit, but it's been kind of made some comments to Greg today in talking to some people. I see the same inquiry like from 5 people, and some of the people I've never even heard of before, right? Where one person's shopping something, and this is how tough some of the markets are, where you've got all kinds of rookies out there just digging to look for a truck of something somewhere, right? But the market overall, since we talked a couple of weeks ago, it seems like has been trying to probe and find some kind of bottom in here. Greg, do you still stick by your statement? We're going to be higher in August than we are today?
I have to, have a little bit of confession to our listening audience. I feel like, I may have led them awry. I don't know yet, but I'm starting to really have some, I'm having to really start questioning. I had said that, by late June and certainly in mid-July that prices would be higher, which I'm going to still stick with that right now. But I'm not sure that if what's happened over the last 30 days would ultimately qualify, because I didn't say it was going to go lower first.
It's a good point.
On what? That's the question.
Right.
I agree with you. I think it's going to be, I think we've got a June, July rally. I refer to that as the summer bump. It's when everybody takes vacations and they load up their inventories before they go because they don't want to be messing with it in July. But before July's over, usually it's done and we're on our way back down in August. I was thinking about the marry, date, and dump segment that you guys do, and mine's not a product, mine's a time.
Okay.
I would like to date the market. I know this is the tail end of it, but as I'm thinking of it, I better say it before I forget it and get it confused. But I would like to date it starting next week with a scale in by, and then dump it by the middle of July. Because I think we're going to go,
basically, Matt, that's what I did last year. Not intentionally. It's just that the market presented an opportunity to sell for much higher prices in July than what you could have sold for in June. And in my career, that's unusual. You don't get a lot of big July rallies, like significant ones. So
last year was a lot bigger than normal.
Yeah. And I'm just like, okay, you guys want to pay an extra $70 for my inventory, go ahead and just take it all. And then I could go into August and September knowing that my kids are going back to school, Labor Day is coming, the seasonal lows are in front of me. So I was content to just go ahead and just cash in the chips and not replace it for the most part. And I also had 2022 in the background of my mind because in 2022, there was a dip in the summer into August and prices got to a point where I thought, well, we should probably bounce from here. And then I just got slaughtered on that stuff. I ended up losing like $200 $1,000 on a bunch of 2-4 number 3 that the market just kept going down and down and down for all of the second half of 2022. So now granted, that was an unusual situation coming off of the highest marks of all time.
I was going to ask you, what was the price? Was $700 probably?
Yeah, I think I paid $700 Texas for some 2-4 number 3 and ended up selling it for $450 to $500 basically, on trucks delivered, and it was a hell of a trade.
I remember the 2x4 number 3 market trading at $1,400-$1,500 delivered to Texas.
Yeah, those days are over.
Imagine if you're a mill and you looked at that piece of wood. I know, Matt, you got to look at that stuff as it going out the door. That stuff's selling for $1,200 $1,000, and it's got those big old knots.
We were selling economy out of the mill and getting, like, I remember a guy turned down an offer because we were $900 and he offered $850, and we said no.
Nah.
He's way too cheap for our economy, for our quality of economy.
It's fun to reminisce about this, talk about.
Well, the reason why we're reminiscing about this is because it's been hard work here for the last 3 weeks, and so we're kind of trying to find something good to talk about. But I will say this, Ashley, you were alluding to being a tough week. It's been an okay week, and it's been better than I expected today. So I had a good day yesterday, and I'm having a much better than average day today, and started with you guys. So thanks for helping me. But I've done several more things since then this morning. I think our mills are for sure liquid. The prices could be better, but we're getting our orders, and I don't know what that means. I see the board finally rallied a little bit after going down for like 2 months in a row. So, maybe there's a glimmer of hope.
Yeah,
in front of us.
Big rally in the board today for sure.
$4.
It's easy to be negative. It really is. Our business, it goes down like 2/3 of the time. We might take 2 or 3 months to build a huge rally and then watch it go away in 3 weeks. So it's just the nature of our business to be focused more. It's more easy to focus on the negative in what we do. It just because of the nature of our business and the way the way it goes up and down, the way it moves. But I mean, having all the roadblocks that have been presented to me here in the last month or so with bad weather in my primary market that continues to today, it's raining down there again today. There's been no great deals for me to have, to go out and find as a buyer. There's been no easy sells as a seller. So it's basically just, like you said, going back to your rookie training, making phone calls, twisting arms, reminding people, hey, I've been here for you for 30 years. I need an order. Those types of things are all true. Having said all that, it's been better than it feels, I guess, is how I would describe it.
Matt, good point. Good point. And what we were talking about today is, it always is a last look market, but it's really a last look market this week, right? If you're not calling the person, you're just sending them an email back. I've been guilty of that. You're just helping somebody else get an order unless you're following up with a phone call and asking, right? It happened 2 or 3 times a day. I called, asked for the business, got the order. But I'm pretty certain I wouldn't have if I wouldn't have done that.
Hey, are you guys finding it more difficult or easier, or what would you say, based on the consolidation of mills and consumers? It seems like there's just fewer letterheads to be able to contact everybody. Is it harder to get inside where those consolidated places are because they're playing ball with each other?
I mean, I work for one of those companies, so it's hard for me to answer that.
I'm
I'm on the inside.
Yeah. Well, there you go. On the inside, yeah. That's why we hang out with Matt.
Well, the funny thing about
we want a guy on the inside.
The funny thing is that I wasn't on the inside in 1994 when I started. I started as a Forest City trader, like a lot of people in this business, and I had just had to grab the red book and make phone calls. And I happened to align myself with customers that end up being really successful, and they got bought by ProBuild and BFS, and then Stock and USLBM, and all these acquisitions have occurred. I think of all my customers I started out with 30 years ago, I only have that's still around as their original, the same independent company that they've been for all these years. And all the rest of them have been consolidated into another company.
This fits into storytelling time, but I got a red book story to tell. Was a guy,
a what?
Lumberman's Red Book.
I mean, some of our viewers, they've been out of business now for, I think, 10 or 15 years, right?
At least. This was back in the 80s. But used to,
whoa.
4A+1. Everybody, all the 4A+1s were checked and circled, and they're belonging to somebody else. We had this little guy from North Carolina that was, he was about as country bumpkin as he could get, and I pray he's not listening here.
God bless his soul.
But he went out one day and he just sold the crap out of about 20 trucks of Southern Yellow Pine. And boss, I was at Tampa International at the time, and I said, "Who'd you sell that to?" So he told the boss who took it up to, and he took the red book back to the credit lady and said, "How about checking some of these people out?" And every one of them were 6L3s. And he says, "What are you doing, sell those people? I mean, 6 means no pay." He says, "No, I thought it means good for 6 loads every 3 weeks." He was selling the pants off of that stuff.
I can kind of answer your question and segue. Greg can follow up because we're chatting about it. The consolidation can be good when you're in some cases, because Greg, based on what we used to do 25 years ago or 20 years ago with a whole trading floor and a bunch of salespeople, you can reach a lot more buying power quicker than you can when basically you could back in those times. So I think it's got a positive also to it.
People still want to be talked to, though, don't they?
Absolutely.
Yes.
Yeah, absolutely.
That'll never change about our business. It's a personal relationship business. Technology has a benefit for all of us. We can move information around faster. We can receive information faster. But at the end of the day, it's who you know and how do they view you that really matters, right? I mean, like Greg and Ashley and Matt, you all have your own little mini corporations. You're Greg Incorporated, you're Ashley Incorporated, you're Matt Incorporated. You guys have created an image and a culture around yourselves over the last 30, 40 years that's your corporate brand, right? I mean, you individually are a corporation within a corporation. Well, Matt, you are your own corporation, but Greg works for another company. I work for another company, but still they're buying from me. They're buying from Greg. They're buying from Ashley. And that's just the nature of our business.
What's difficult that I found is the older you get, the longer you have your identity of who you are, the more difficult it is to change it. If I want to try to embrace AI or, more the digital age, a good example of that is materials exchange. How that was a brilliant idea. I thought, as far as I could see, I thought it was a brilliant idea and would go forever, and that was to be all and end all. But the industry just wasn't ready to make that shift and that change. And I think a lot of times we're kind of an industry that's all the wisdom is between 40 and 70 years old. There's a whole rash of folks that they don't know what they don't know, and they don't want to know it. They don't think they need to know it because of the digital age, and you can ask AI anything you want to get. It'll give you an answer, whether it's good or not. But like I'm stuck on AI.
I just wanted to take a little bit of a shift on things here and address kind of a little bit of an elephant in the room. Matt, Ash went out solo last week. I kind of think of us as, we're kind of an up and coming, like rock star band, right? And Ash was thinking of like going. He went out on a little solo tour last week. I gotta say, I loved it. I don't know. Are we gonna keep the band together?
Well, did anybody come to see you, or can you still draw a crowd?
I would say that it was probably one of the least listened to shows, but it had some content. I wanted to keep the continuity and at least get them up there every week.
There's a difference live at the Forum and live at Coyote Joe's.
Yeah. It wasn't
Ash, you had some really good insights on it that when I listened to it, I went, wow, that sounds really, really, I get that. Yeah.
It wasn't the Tom Cruise where he in that movie where he basically stays up all night and writes the novel and then gets fired from the agency the next day. Whichever, the football.
Jerry Maguire.
Jerry Maguire. It wasn't a Jerry Maguire moment.
Show me the money.
But
show me the money.
We got Matt on here today. One of the things I really wanted to talk about was Southern Yellow Pine. So I had one of our mutual friends on the other day in the car driving home. He was telling me about a report he was looking at, how adjusted for inflation, Southern Yellow Pine is basically trading in 1970s numbers.
Well, the fiber is for sure.
Yeah. The fiber. And the other point, and I'm not going to get the states, there are about 4 states in the major Southern Yellow Pine producing regions that multifamily is down 50%. That's a huge number. So not only are the multifamily that take a lot of Southern Pine in these jobs down, but that is a close ship to area. And this person was saying, those are the mills that can shut down quicker because they obviously don't have to build a log deck. We had Dustin from Random Lengths on a month ago, and it looked like capacity was already being rationalized. But Matt, what do you hear on Southern Pine with the numbers, where we're at relative to everything? This is a surprise, I think, if you were one of these buyers of these mills 2 or 3 years ago, right?
Yeah, I still think they're making money, but from a Canadian perspective, any profit is good profit. So those guys are probably hanging on because it's the best thing they got going. But then the other smaller mills that are privately owned, I think they're setting up they're going to get sucked up. They're going to get bought, because if they're not making money now, then they're why keep on doing it over and over and over again, where they shut them down or whatever they do with them.
Well, it's crazy when you think about what they could have gotten if they'd sold in 2022 or even 2023 versus what the multiple is now, right?
There was a mill down in South Georgia. It was owned by the family that was at the time, the guy that was the head of the Coalition for Fair Lumber Imports. And he sold his company for $3 million to, I think it was Benderholz, if I'm not mistaken, but it was a German company. And they turned around and sold it within the same year with doing nothing to it to Canfor for $10 million more.
Is that good?
Is that
Yeah, it sounds like a good return.
Yeah. What are the people in your crew, Matt? Your listeners, your stakeholders. What are they saying on the Southern Pine side? Are they building an inventory? Are they doing anything different? You have treaters in there. Are they doing anything different?
They're probably more optimistic than they should be, I think. There's no shortage of production. We're coming into the time of the year when DIY and R&R is supposed to be as good as it gets, and it doesn't look very promising. So there's a lot of wood sitting on the ground. I go around and check at Lowe's at Home Depot, just spot check about once a month how much treated inventory they have on the ground. And that's kind of a barometer for me about what kind of position are you taking in the entire lumber market? Because if they've got enough to stock it outside or keep it outside, they've probably got plenty inside too, with studs and OSB and everything else, and that normally is the case. But I noticed that their inventories were particularly high at the beginning of this month. And I thought, based on what they were saying outside the lumber industry about the economy and mortgage rates and housing and new homes completions and all that kind of stuff, that they were going to be doing less this summer than they planned for. So I think the Southern Pine market is overbought, and it's got room to come down a little bit, maybe $50, but it's a timing thing. The only thing is where Southern Pine gets a nice little bump in the middle of the summer, just because everybody goes on vacation for July, and it's easy to do. You can pick up the phone and say, give me trucks, and you're done with it. It's not like buying cars and having to trace them while you're on vacation. So it's the simplicity of it is still the draw, I think.
Matt Beamer, what's your kind of sense on the home center business from a West Coast perspective?
It's what we expect. It's our shipments are steady as she goes. Our business with, I guess, medium scale home center type, not the two big nationals, but then there's another layer underneath that is back to normal. We took about a 2-week hiatus there, and sort of in the middle of the month of May, and now we're back to normal shipments. So we're at our normal May and June shipment levels, which is good. I mean, it's not any different than what they predicted. They said it was going to be flat this year compared to last year and the year before. Now, last year was up 10%, 15%. The year before that was up 10%, 15%. So this year they called it flat, and it's been flat. And it's, they're doing what they predicted. And they just keep taking the same volumes each week. It's not like we're having this big zigzag up and down like with how you'd see like a chart, a futures chart. It's just been a nice steady takeaway. So, I mean, that's not an issue from my perspective. My issue is more like, when I look at the lumber market today, I see things like consolidation. I see yellow pine being really cheap compared to everything else. I see weather's been kind of a factor this year. This has been a wet spring in some of the consuming areas. I see the American consumer sort of being on defense with higher interest rates and borrowing costs and extended credit lines and inflation, personal inflation with your cost of ownership of a vehicle or a house. Your insurance rates have gone up, your energy prices are up, your food prices are up. So I see those things as bigger headwinds than us losing market share or volume from the home center side. That home center side is it's just like the calendar. It's just predictable. The other thing that's more concerning to me, and we've alluded to this many times in the last year, is the slowdown in multifamily. That takes a lot of 9-foot studs and 10-foot studs takes a lot of plate stock out of the game that otherwise would be consumed. That's now available for open market business, because you can't take all that extra lumber and just slap it on your contracts or VMIs. It just doesn't work that way. So, you know, at the end of the day, if you're a sawmill like us, you're going to have to get that on a list somewhere and publish it and see what the market will pay for it. And there's just more open market wood now than there was last year or the year before. There you go.
I think part of that also too is, speaking on the multifamily side of it, is we hit in probably 22, there were more developers speculating on lumber than ever before. I mean, warehouses.
That's true.
You couldn't find an empty warehouse anywhere, and now they're all over the place. But you take the developer as a speculator out of the market, and it makes it liquid like it was before. And it's a good thing. I think it keeps them out of the buying 20 truckloads of studs and 100 truckloads of OSB and saying, okay, I'm good for 6 months, leave it alone. It's I think it makes it a better trading market for you guys.
Yeah, well, it's gonna be interesting on the multifamily. Matt, you were right. As you know, we talked about this as long far back as the fourth quarter. You know, that because of how much was in the pipeline, that and then the market was probably already slowing. You know, at a 30% decline. You know, through the first 4 months, we get May housing starts not until June 20th. But, you know, in the first 4 months, permits from multifamily down 25.4% and starts down 36 point, what's that number? Where is it? 36.6%. You know, I mean, and Ash is highlighting that in Southeast region, that number may be as much as 50%. And, you know, so the question is, I mean, is that going to hold up on an annualized basis, or are we going to get, you know, some recovery in the second half of the year in the multifamily segment? That's I put out there. That's a big question mark that has dramatic implications for the market as a whole. You make that call. No, it's going to stay down 40%, 30 to 40% for the year versus you're going to get some sort of a recovery.
Well, if you ask your question, why is it down, then I think you'll get the answer.
Well, we know why it's down. It was down because there was a record amount in the pipeline, and that combined with the higher interest rates that changes the dynamic. And there's been you see what's happened to commercial real estate in general, and the issues the issues with their debt. A lot of multifamily jobs are financed by regional banks, which, you know, have tightened their lending standards. I mean, I know personally that I've got 3 or 4 that were ready to go over the last couple months that are on hold permanently now, waiting for financing.
Yeah, I think that financing is an issue for small and medium-sized people in our business, whether it's guys that want to start a new company and get in the lumber business, or guys that want to be developers, you know, buy land, turn it into housing. Just whenever you're going to go, if you're in the building business and you're going to go to the bank and try to get a $5 million line of credit, the odds are stacked against you right now compared to 3 years ago. You're going to have to show up with a lot of your own money in the game, a lot of your own skin. It's, you know, maybe not such a bad thing, but we'll see. It'll all work itself out. I'm really neutral on the rest of this year, Greg. I don't think things are going to change drastically. I do think mills will slow down production as the year goes on, just because I think the pain of suffering is going to cause some people to just take extra time off. You know, I mean, it's just, there's no margin to be made in this right now. And I think
we look at like your mills, Matt. I mean, have there been changes? I mean, I don't know that you can talk about. I mean, I know you're on the inside, and we're asking for, you know, a look under the hood here.
There's nothing's changed here at Hampton. We've been producing what we can produce the last few years. I actually asked that very question: is our production gone up? And no, it has not. It's flat. So,
but it hasn't gone down either.
Hasn't gone down, hasn't gone up. But we're not really capable of producing as much lumber as we really could, right? We can't hire enough people to run our sawmills at full capacity. Okay. And we can't retain enough people. So here's another problem that nobody talks about in our business. As a sawmill, it's very hard to retain young people. Very, very hard. You get them hired, you pay them a good wage, they show up, work for a month, and quit. and they go work at an Amazon warehouse instead, where it's air conditioned and they get maybe better benefits or whatever, or a higher starting pay. So retaining people in the sawmill business is difficult. So we're really relying on our experienced veteran employees to run our mills, and we're running 1 or 2 shifts, and that's all we can do. We're not running 3 shifts anywhere. We can't. And then if we do, we're gonna shove our log costs so far high up in the stratosphere because there's so much competition for these Doug fir and Hem-fir logs out here in Oregon and Washington. And now you got Sierra Pacific building a new super mill where the old Seneca mill is. They're going to be competing for logs. So it's really, really tricky as an operator in the West Coast. How do you increase production? You really can't. You've done all the upgrades to your sawmill that you were going to do already. You took that generational wealth that you earned in 21 and 22 and you reinvested in your sawmill technology. So you're already maxed out with your efficiencies right now. The only way you could get more production is to go add more production on. Yeah. And we can't.
Or move the machineries to these kids' homes so they can get out of bed at 10 o'clock in the morning and cut lumber from their house.
So that's an important thing too here, Ash, because where Southern pine mills are not desirable places to live. I mean, your major shopping consortium is a Walmart, and if you've got a Target, you're upscale, but normally they don't have.
That's called Target. That's called Target.
Yeah, we have a place called Marchant here, but.
Man, Lehman, I want to ask you a question. You said before that you thought that Southern pine mills were profitable at today's numbers. I'm struggling with that when I look at what the mill net must be, based on today's numbers. Now I know that 10 inches had a nice run up from the 200s, but you're still looking at a weighted average price on pine mills of like $300 ish, maybe.
Yeah, I've got $350 for my break even.
And I'm saying is that their price is probably closer to $300 right now, right?
Yeah, so they're
mill net. Mm-hmm. Okay.
So it's not like they're having to make $600 lumber to be profitable, and
okay,
they still. I think the interesting thing about Southern pine is going to be that the new people that have come down here and built mills are finding that one by one, more quickly than not, that those mills just aren't as profitable as spruce mills or Western dry fir mills because of the nature of the log. And when I think we've had Thomas on from Bender Holt several times, and when they bought the mill, when it first started, they built the mill in Live Oak, Florida, and then they had one up in I think Eden, North Carolina, and they never opened the North Carolina mill because they couldn't get the kinks worked out of the Florida mill. So, and I don't know what they eventually did about that, but apparently the equipment they were using was built to handle a more pliable log.
Let's jump in through another couple of other species quick. I know last week, we'll get to spruce in a second, but if I saw it right, Greg, we were talking about, you actually pointed it out. The composite was up last week. Yeah. And U.S. species were up last week. Matt, how are U.S.? How's the green, dry, Hem-fir?
I think green is flat. On the 2x6 is a little down, 2x4 is a little up. So, I guess I call that flat. It has a pretty good liquid lean to it, though. There's been a lot of transactions here the last couple of days. Studs remain liquid in the West. Prices aren't going up or down. They're just sideways. We wanted to sell a bunch of dry Hem-fir and dry Doug fir narrow dimension lumber for our sawmills starting on Monday, and we've accomplished that here by Wednesday afternoon. So it's been a really good week for us.
What kind of from a standpoint of midweek print, is that representative of the prices that you've been selling at?
Honestly, I can't remember the last time I looked at print, dude. I just don't care. It could just be like Casper the Friendly Ghost as far as I'm concerned. It means nothing to me. I know mill guys like to get all worked up about random lengths, not printing something accurately. I learned that lesson 25 years ago when I used to be one of the
I'm just looking at it from a benchmark, hey, listen, that is the thing that people look at it like, hey, so if Coast Hem Fur says it's 435 mil, is it selling at 400 or is it selling at 430?
I mean,
I guess
are you looking at print? Because I'm not looking at print. I don't know what Coast Hem Fur 2
I'm looking at midweek. Yeah, midweek was 435, which was, I believe, unchanged from last week.
On
Yes.
2 and better.
On 2 and better. Yeah.
I'd say we're selling for less than that.
Okay.
Not a lot, but slightly under. Now our freight is high too, right? So, we don't have rail serve sawmills, so some of that's $15 of freight fluff that we have to truck it over to Portland to get it to load. So,
but it's not like it's terribly discounted. You moved off what you needed to with reasonable.
Honestly, we're selling at the same prices. I've been selling the same price on 2x4 and 2x6 hem fur. I've literally been selling the same price to my customers for the last month. And all we do is dicker about the tallies and the ship times. It's like the prices are unchanged. Like they're like in a $4 or $5 window. No kidding.
And Meanwhile, I talked about that.
Orders on spruce. I'm having to give ground on spruce 2 and better. I'm having to give ground on 2x4 and 2x6. I'm having to give ground on MSR. I haven't had to give as much ground on low grade, but I do have to give a little bit of ground on low grade. So, I mean, it's really interesting to me how stable the Western hem fur and Doug fir prices have been in relation to what's going on in yellow pine and what's going on in spruce. And mainly, I think spruce is sort of the one that I pay more attention to because I just don't trade yellow pine, but I'm aware of yellow pine. I'm just
yellow pine's been flat, been up basically for the last 4 to 5 weeks on a print basis.
Do you pay much attention to that, Greg?
Yeah, I mean, I watch it all the time and looking at the basis and relative prices.
It's easier for people to do Southern pine because most everybody from Texas to Virginia is within 50 to 100 miles of a Southern pine sawmill. And everybody knows it used to be before COVID rolled around, you could buy anything from any mill with $25 freight. And now it's kind of like you could buy anything from any mill for $50 freight. So they do look at the treaters particularly look at random lengths because their contracts are tied to that. So they want to know, like, they're always, most everybody will have I need to buy at random plus 30 delivered to Maryland, or random plus 50 delivered to Michigan, or random delivered to Abbeville, Alabama, or something like that.
Mm-hmm.
So I'll tell you something that just happened while we were talking. We just sold green Doug fir 2x6 for $20 higher today than we did yesterday. So I find that fascinating in and of itself. Just more evidence that the Western species are sort of like in their own little world right now. They really are.
Do you think they're picking up some market share that's being lost by Western Canadian SPF?
No, green Doug fir is a West Coast thing. It's all just going to go up and down the Oregon coast and the California coast and Washington. It's just time for them to replenish, and the prices are so cheap now that there's no point in really. 2x6 we're selling at $355 mil. That's cheap, right? For green Doug fir.
Number 2 with a 3 is a good deal, I think. Yeah,
that's just it's a superior product, honestly. If you've ever seen it, it's nice wood and it's heavy. It takes a heavy workload. They call that the softwood workhorse of the business for a reason. Yeah, Western species, the dry hem fir, the dry Doug fir, and the green Doug fir, they're all just kind of staying in their own lane, and there's liquidity in the Western markets, and nobody's building inventory. So this is the other thing that's happening is, since no one's building inventory, you just get more plate appearances each week and steady as she goes.
And that's a case really with all species is, the end users aren't building inventory. They've got whatever their working level is. And, the way I've described it is for the last, 4 to 6 weeks, market's been quite a bit of equilibrium. Mills sell enough lumber every week to prevent having to take sharp price cuts. There's a discount here or there, obviously, but they don't sell enough lumber to really raise the price. And the customers don't see any reason. My wild card is the pipeline shrinking at this point in time, because the longer you can go as a customer and buy whatever you want and get it as quick as you want and don't have to worry about the price, do you say, hey, I can operate with less?
I think that distributors will.
Yeah, I think it is a shrinking thing, but it's just a function of what the builders do this time of year. Their second build, which is what we're in the middle of right now, is not as big as their first bill, which is getting houses ready for April. And the second bill, which they're in right now, has been scaled back. So the builders aren't building as many as in June as they thought they were going to build in January. So it's part of it's a function of what the housing market does anyway. And I think the second leg of it is that the new home inventories are just, what are we now, 9.5 months?
We're at 9.1.
Yeah, so that's pretty, look at where we just come from. I mean, it's almost like we add a month every month.
Well, I mean, it's
not quite.
It's up from the beginning of the year of. Hang on, stand by.
So
Beginning of the year month supply was. I lied. I can't find it.
I think it was like around 6,
month
wasn't it?
supply. We started the year at 8.3. Last year we averaged around 8% all year, so it's up to 9.1. And I think that's a good point. You want to watch that when we get the next month's report. Is that 10 point something? Because then that would really indicate a significant, probably ramp down in the balance of the year. Because you don't if that's you don't want to move. If that moves up to 11 or 12, then that's going to be a real slowdown in single family.
Well, there's going to be. You can already tell that the HMI builder sentiment for next month is going to be lower. They are definitely seeing less traffic, less sales, less optimism, and that right now is hovering around 50%.
You think that they'll put their sales hat on and go out and offer some sweeter deals for the customer? Because for now, the last 2 years, they haven't had to give up a lot of price leverage. They've just used sweeteners to get people to close. They could give them a 5.5 interest rate, and they throw in the granite countertops instead of the Formica. And they've been, talking about in their quarterly reports how they've had price strength. So do you think that they'll start to compete on price?
Yeah, and I think that's going to scare buyers away. If it's going to be, there'll be a bidding war when Lennar and KB and all those guys.
I don't know about that. I mean, the reality is there's very little choice from the existing home market. That inventory continues to be very low. So 80% of housing starts are south of the Mason-Dixon line. And in all those markets, I mean, your best choice is, a new home. And, if you want to buy that, it would see builders' margins, they have room to keep things moving. I mean, their stocks are up anywhere from, 5 to 20% still year to date. So, I don't know. My sense is that they're going to continue to keep things moving because that's what they're in the business to do. The ITB is only up 5% year to date. I looked at Toll; they were up 20%, and Lennar was up 9%.
One interesting thing I saw somebody put out this week: how one of the big builders in one of their communities that has $1 million plus homes, what they did, buy side real estate agents are getting a flat fee of like $10,000. Instead of a 2.5 commission on $1 million house. So they're finding different ways to keep that margin strength, if that makes sense.
Well, since they busted the whole real estate commission cabal of, it's a split there. Now it's all kind of freely negotiated. So that opened the door.
But it's interesting because a lot of that is coming because it's the new home market are putting.
Well, it's easier for big national builders to
say, here's what we'll pay.
They have more control over that anyhow because they can dictate that. Yes, last week one of the things is I listened to your call on the CME, and wow, did you hit it on the nail? I mean, you called for the sell off sub 500, and I mean it's like no sooner had that your podcast dropped than the market fell about $30-$40.
Well, thanks for letting me
you have that kind of power.
Thanks for letting me repackage your ideas and making them my own.
Can we see your P&L sheet on your trading?
Here's the interesting thing, right? So look we were holding a $40 basis, $30 basis to cash for a long time, no matter how you want to look at cash. What's crazy this week, open interest was up 4 days, new all-time high in open interest for this contract, 11,000 and change on down days, right? You have a battle of the long industry that don't have it connected to forward pricing. Can I say that? And
You don't know that.
we
You
don't.
surmise that.
That was pure speculation on my point,
Yes,
and
you could say
I could be wrong. And you have the short funds who everybody has been saying for a month and a half have to buy their way out. So my question is,
the long funds too. So are the long funds and the short funds just in a virtual pissing match over swapping contracts?
No,
because short funds are 10-1 over long funds. It's 10 times more short funds than long funds.
What we can see from looking at CME and how many times these long industry have rolled, somewhere between $80 to $100 a thousand. I'm guessing some of these are offsides. So I guess my thought was the way to see capitulation would be high volume day, open interest dropping significantly, where shorts and longs both exited their positions. We were talking this morning, Greg thinks it may happen a little bit differently. I would say basis is pretty much is in even money now. Would that are we there? I would say yes.
For the most part, yeah. I mean, we can argue that cash is some sort of a discount to where it is, but
so we're up a little bit
significantly.
Up a little bit on the board today. I mean, I guess at this point,
what do you mean? It's up $5. That's a rally.
Up
man.
$5.
Let's go.
So
the rally.
Are we here, or do we still go down into that 450, 470 range before we do something? I mean, that's
a great question.
question.
I don't think any of us can answer it, right? I mean, unless you want to
Exactly.
put on the genie hat
idea.
and start making like specific predictions about where futures will go. I will say that I want to go back to something you asked about 10 minutes ago about inventories thinning out. I think that there's going to be less euro coming. I don't think they really like these prices. I think there's going to be a little bit less product coming from both Canada and domestic production. And I think that you're going to see people that either put lumber on the ground as speculators to do a truck distribution type model, or actual distributors are going to lower their inventories as well. And so by the time we get to August, September, October, I think you will see a much leaner pipeline. I really do. I just don't think that there's not enough margin in it this year to justify carrying a lot of inventory. And now you're starting to see competition on every facet of it just to get orders, right? Like people want, like you said coming in this week, Ashley, that it was going to be a tough week and there's a lot of competition for it. You got to make a lot of phone calls and twist arms. Yeah, you do. Guess what? So is all 12 of your competitors doing the same thing. And so when that happens, we're in that cycle in the market where everybody's going to compete for truck business on price. You're screwed. You can't justify the margins you're going to make unless you're really, really a good disciplined hedger. And a lot of people aren't. They hedulate and they kind of play games with themselves, but in reality, they aren't hedging. They're just speculating. So I wanted to touch on that real quick because I do think that's occurring as we speak. You'll see less on the ground inventories for people to choose from, and you'll see less euro inventory for people to choose from, and then we'll just go back into more of a standard rail car delivered out of the sawmill type business.
And Matt, bringing up the euro, we talked to one of our euro partners yesterday, and I've heard this from a few people. They still have the beetle like they had up in Canada over in Europe now, just starting to pick up over there. Does that sound right? So there's what he called calamity wood over there, and that can make it over here pretty easy at a low cost. I don't know how much of that there is. Greg may have heard it better than I did, but really they cut two types of logs over there. The premium logs go to the Middle East and Japan, and then the construction type logs, which are still beautiful logs and beautiful lumber, that comes over here or can stay in Europe. There is no market in Europe right now. Japan is okay. The Middle East is okay. So they still are cutting stuff for the U.S. I think, Greg, they said they were down 30% year over year.
I mean, the number he gave us for the third quarter was basically at a run rate of 800,000 or 900,000, which is like 40% of what they did last year, of 2 billion board feet last year.
Yeah.
So it's less than a billion. That the run rate in Q3 he thought was going to be like 800 or 900 million board feet, right?
Yeah. So I guess did we figure out how much less euro we're going to see this year coming over? Just totally from Europe?
Yeah, I mean, I think it's going to be down 25 to 30% when the year's all done, unless we have a tremendous rally over the next, 60, 90, 120 days.
Yeah, it's noticeable.
I mean, it's showing up in, the number of sailings that are available. The interesting thing to me is that it appears that so far, the place where production is up is Eastern Canada. That's the region that's driving spruce prices lower. But anyhow, I wanted to correct one thing, Matt. I said it was 10-1. The commercial longs versus commercial shorts, it's not that much. It's more like 2 or 3 to 1.
You're only off by like 5 points.
I mean, that's poetic license, right? I mean, you get to kind of just like,
you're as accurate as an American journalist, buddy. Way to go.
When my wife says, "You're telling that's not the way it happened," I go, "Yeah, but this is more interesting the way I'm saying it."
My kids tell me that when I start telling stories about the old days, like, "Dad, that never happened. Just let me tell the story, kid."
Yeah, I know. Why ruin it? But by like getting into the detail, let's.
Hey, Matt, but speaking of that, congratulations on getting a second one through high school.
Third. Yeah, no, I'm down to my last one.
Congratulations on another tuition bill, brother.
I know. Thanks, buddy. Yeah, actually, I'm very proud of him because he earned scholarship money, academic scholarship money. He was the National Honor Society, and he's a lot more dedicated student than I was, for sure.
That's awesome. Where's he going?
He's going to Grand Canyon. So I've got one in Gonzaga, one's going to a local Portland Community College, and then I've got the son going to Grand Canyon and Phoenix. I'll be going to Phoenix a lot next year. It'll be fun.
Nice.
Especially in November when it's 40 degrees and raining up here.
Yeah, you'll just have to leave a set of sticks down there.
Yeah, for sure.
So I figured we'd kick out Mary Day Dump.
We're like way over our time limit today, Ashley.
Yeah,
but this is fun.
We kick out Mary Day Dump just because, like Matt, I'm not finding a lot of things at these levels that I really want to dump at this point. But I did want to ask the question to finish it up here is we're kind of at a point right here where we've sold off a lot more than people originally thought. We could sell off more. What is in everybody's head? What do you think? What's everybody's bit of advice? Doesn't have going forward here for buyers of lumber and sellers of lumber. We sometimes leave them out.
You guys have said this several times before, like take speculative positions and having to sit on them longer than you want to. And I think that's where we're coming up to. We're coming up to a place like Matt was saying. You can see this market continuously falling apart little by little by little. And if we can make it to October, the end of October, on a weak note without a significant rally, I think that's a gold mine for opportunity to buy for a buy and hold. But between now and then, I think the market's just going to be choppy, both sides of the market, and reacting to whatever kind of news we get. We could get a political thing, we could get a China thing, we get a Russia thing, a Ukraine thing, a housing thing, an interest rate thing. There's so many things to make us react one way or the other. But I refer to this period as the summer chop, and it's just difficult to find a place to put it. Just listen to what you guys said right there. I would feel if I was one of your customers, whatever my inventory level was, I would feel comfortable with it and knowing that you could get me more if I needed it, and business is busy enough to get rid of what I have.
2 comments. One is all those things that you said are what we call on the lumber word, Matt, is unknown unknowns. There's known knowns, there's known unknowns, and then there's unknown unknowns. Those were unknown unknowns. I love your idea of like getting to October. That's about 5 lifetimes for me between now and then.
Not I'll be in the business in October either.
Yeah, to your question, Ash. I mean, if we look at the big picture, we're looking, hey, demand side, multifamily's way down. We've got question marks about what single family is going to do, and home center is flat at best. So demand side is, there's not a lot of positive outlook on the demand side. and there's maybe a question mark on, like easing off some bit. So that's a bit of concern, which would say, hey, you should be more conservative. On the production side is we're operating well below the cost of production in most every region. And, the market's been hoping that supply coming off is going to save the market somehow. That's not going to happen until no one thinks that can happen. And, are we a day from that, a week from that, a month from that? I don't know. I'm out on a limb saying that prices will be higher in July. I'm like a stopped watch, and I'm just gonna stick to it. And somewhere along the line, I'll either eat crow, and you and I'll be dumping some lumber at the lows, or
adding to your position.
But I mean, as Matt Beamer had said, there's liquidity. We can sell as much lumber as we want to a degree almost every day. If we're just out there and aggressive, and Matt and Ashley and I look every day, and a lot of those orders are actually really good orders. Some of them, oh boy, we might have made a mistake on freight on that one.
Yeah, maybe I had something to do with some of those, but I feel like right now the money is going to be made if you're a trader. Most of the for sure money that you're going to make is going to be on either taking an order to buy at a plus number over today's price into the future, or just back to back in some lumber, or selling some lumber for your sawmill where you're for sure going to make a margin on it. Like you've just negotiated a margin. The speculative part of what we do, where you put wood on the ground and operate from the long position. If you're the guy that's been operating from a naked long position for the last 2 months, you've just got your teeth kicked in the second quarter, right? And so those types of guys are going to disappear in the second half of the year. They're going to tuck their tail in between their legs and just go home and find something else to do. And then the guys that, like you, Greg, that are active hedgers and basis traders, you'll figure out a way to unwind your position profitably. And it'll work out, right? It will.
Lips to God's ears, Matt.
It happens that way. It feels dark when it's dark, but you have to trust your experience because it always comes together, right?
Matt, we have a new statement this week. You know how we always say in an up market you never have enough lumber?
Yeah.
In a down market you never have enough hedge.
Exactly. That's every time we look at it, we go, God,
Wrap those on.
It's just, I think about it back in more traditional markets, you usually have 2 times of a year. I think Greg used to always say 2 times of a year you can make money. One's a good move, one's an okay move. Rest of the time you're treading water. This year, you could arguably say the third one it gave you, Matt, and you just alluded to a Beamer, is we had a great basis and a rolling opportunity. It let you get out of that Q1 position a little bit easier through Q2. So I still think there's one more bounce coming. I don't know whether that's going to be a $50 or $100 bounce, but my guess is if it happens, it'll probably be pretty quick, like that hard and fast one we had a year that ran up like a year and a half ago, that ran up like $80, $100 and came right back in 3 weeks, right?
Yeah.
So
Those are fun.
Yeah. Well, that's
grab yourself in. That's it.
We did an hour. Matt Lehman, great having you. Beamer,
Thank you guys
great
for
to have
having
you
me.
back.
Yeah, great to have you.
Appreciate it, guys.
Thanks for listening to this week's episode of The Lumber Word. The Lumber Word podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. They should not be considered as financial or investment advice. We encourage our listeners to make their own financial decisions, taking into account their unique circumstances and financial goals, and to seek professional financial advice if necessary.